We're a cryptocurrency and blockchain newsletter that talks about the daily events of the market, anything that's really going around, anything that we think that you need a macro outlook on. We're going to be doing it here. So it's April 18th. It's daily bit number 84. Let's get into it. And again, just as a quick disclaimer, this isn't financial advice. This is just a bunch of kids talking about what's going on in the market and kind of our thoughts about that. If you want to subscribe to our newsletter, check out the dailybit.news. There's a sign-up box right as you log in right there, and you can plug in your email address, get our newsletter Monday through Friday. Now for our table of contents, we're going to look at a tweet of the day, word on the street, where's blockchain, what else you should read today, bulls and bears, and then our education. This is the same structure that we're going to do every day, and we have been doing for every day. For a tweet of the day, this is coming from New York's Attorney General. He is launching an inquiry into cryptocurrency exchanges because of the growing prevalence of cryptocurrencies in New York and across the country. He believes that we need transparency and accountability, and quite frankly, we do too. So we're going to take a look at that right now for our word on the street. And again, Eric Schneiderman, he sent a questionnaire to 13 cryptocurrency exchanges, and this is more of a fact-finding inquiry into the policies and practices of the platforms, because right now there's really not much information out there that's available to consumers and traders or investors when they're logging onto these platforms and trying to assess the risk and the pros and cons of each of these platforms. There's no concrete framework available, so any information that is out there is also very skewed and not uniform across the industry. This is very different from traditional equity markets and exchanges, where there's a lot of detail out there and you're fully able to assess what's going on, and everything is very open. It's not that way with cryptocurrencies and cryptocurrency exchanges. So again, he's looking for information on the operations, internal controls, and any safeguards for consumer assets, because we've been seeing a lot of hacks. There's been allegations of illegal trading and illegal volume. Spoofing is another act that goes on. Market manipulation is apparently very rampant with Bitcoin. So again, we're looking for a little more transparency in the actual process. Now, the reaction from the crowd, the exchanges that are actually being questioned, which includes Gemini, HitBTC, and 11 other exchanges, were very open so far. There are 5 responses that have been received according to CoinDesk since the news actually did break and it was reported by them, and they're welcoming the Attorney General's efforts right here, because they're understanding that, look, we need to get more clarity, we need more regulation, we need these investors to feel safe when they're actually working with our platforms. Otherwise, that's going to stifle growth. We need to make sure that everybody is kind of on the same page with this stuff. And again, if we're looking at some examples of this controversial activity, what could actually happen? Rebate trading, wash trading, front running, and painting the tape. Rebate trading, wash trading, and painting the tape. While rebate trading is making commissions and providing liquidity as a market maker, wash trading and painting the tape are more fluctuating volume and showing fake volume, and front running would be layering the order book. So if you saw that an order came in, you would be able to place your order, your buy or sell, in front of that one, gaining an economic advantage in the market. So what to watch for right now? I would say that we should look at the remaining companies in the exchanges that are being inquired on by the Attorney General, and seeing how they respond. If they're going to take this poorly and there is actually illegal trading go on, then they're probably going to have some issues operating in the United States markets. And on top of that, we could potentially see some clampdown for American investors that are working on these platforms. Again, we'll see, but that's just our 2 cents on what's going on. For blockchain, we're looking up digital art. So right now there's a couple potential applications for blockchain with the art industry, specifically digital art. Now, number one, artwork is scarce. So if you're trying to replicate artwork, that obviously increases the supply, and that'll bring down the price of some of these pieces of artwork that can be worth hundreds of millions of dollars. And again, there's this whole concept of scarcity. We see it in cryptocurrency economic systems as well. Artists are also not going to receive credit if you do replicate your work and fraudsters come in and try to copy the work and redistribute it elsewhere. They don't have the same attribution rights as they do with that original piece. So again, in order to make sure that the value is retained by the artist and they do get credited for all their work, we can look to blockchain platforms to store digital art on a blockchain and make sure that only those who have the rights to that actual artwork are able to view it, are able to are able to kind of obtain the rights there. And again, you would be able to track everything through the blockchain to make sure that you can understand where it is at all times and where that ownership lies with everything. So again, there's a couple platforms that are looking into this right now. Monograph is storing and redistributing digital artwork on the Bitcoin blockchain, and they're also a public catalog. So if you wanted to search for art pieces, you can check out Monograph. Codex is is a protocol on the Ethereum blockchain. So again, they're looking at they're creating an area where dApps would be able to build on top of their platform. Mecena, so they're allowing people to purchase ownership shares in the network, so in the artwork. So again, this is fractional ownership in assets. This is purchasing quote-unquote tokens within a project. It's buying into assets and making them more liquid. And DADA, they're a decentralized marketplace for art powered by smart contracts. So again, I expect that we're going to see more of this stuff going forward, and there are definitely many more examples of projects working with art right now. So for what else you should read today, we're just going to run through these. If you guys want to take a look at them, I'll link these notes in the show notes, and then you can kind of go through it yourself. So Japan's Financial Services Authority has been getting more strict with their regulations since the CoinCheck hack. So because of that, Kraken Exchange is pulling out of the country. Funfair is partnered with Spike Games. They're going to be recreating games built on the blockchain. Crypto communities, often there's a little bit of strife between two of them, three of them, whatever it might be. Example, case in point, Bitcoin versus Bitcoin Cash. So again, that's counterproductive. Why is that counterproductive? Take a look at that article there. Jimmy Son, Bitcoin developer, Bitcoin entrepreneur, explains why Bitcoin works. And again, this has to do with incentives and a couple other things that make these governance and crypto economic protocols possible to drive demand for the product. OTC trading platform Local Bitcoins is now requiring ID verification. So again, you're going to probably see more KYC AML as regulators really push for the platform to demand ID verification to make sure there's no fraudulent or illegal activity going on there. Switch.io, they're a decentralized exchange built on the Neo blockchain. They just processed over 2 million in trading volume during their first week. I believe they offer 10 trading pairs right now. So again, just keep an eye on these decentralized exchanges as they continue to flourish, continue to grow in the ecosystem. And Novati, an online payments processor, they integrated their payment platform with Stellar's blockchain network. So again, seeing Stellar as a currency and working kind of in tandem with these payment processors to help them again obtain the benefits of blockchain. We're going to be seeing more of this, in my opinion. So again, just another partnership for Stellar, and again, gaining more legitimacy as a use case. For bulls and bears. So again, tokenized securities. This is something that Kevin O'Leary of Shark Take spoke about a couple weeks back. But again, Harbor is a compliance platform. They're looking to create an area where securities can be tokenized on the blockchain. Specifically, we're looking at private securities. So, not to get ahead of ourselves. Again, they received $28 million in a strategic funding round, and the lead investor here was Founders Fund, and along with that, Pantera Capital and Andreessen Horowitz also took place in the funding round. So again, these are crypto companies, crypto hedge funds that are getting involved here and are kind of looking at the space. So what are the uses for tokenized securities? Number one, these private assets are very illiquid. There isn't much of a market available to them. So by putting these assets on the blockchain, you open yourselves up to a global network of buyers and sellers. They become much more liquid. And on top of that, you're also able to implement what's known as fractional ownership, where you can own less than one share or one traditional share. So again, if you have $5, $10, $15, you can buy into any of these real estate assets or private assets. However, it might just be limited to accredited investors for now. And again, there's real-time transfers of ownership. Generally, it takes about 3 weeks for traditional securities to be transferred. And there's an immutable record of exchanges. So again, if you're a millennial that wants everything right now, you're going to be more attracted to offerings that are on the blockchain than trading through traditional markets. Now, for the regulated token standard, that is Harbor's open source compliance framework, and if you're wondering whether or not things are going to fall in line with the SEC and other regulatory bodies, they will, and you can kind of tweak your conditions using the framework in order to fit the jurisdictional securities requirements that you need to do for your given situation. So again, great things coming out of Harbor. And we'll see, they're supposed to be launching this summer, so we'll see what goes on there. Now, hard deal for Verge investors. So if you're looking at crypto Twitter the other day, there was a lot of talk going on about a huge partnership that's coming up with Verge platform, and lo and behold, it was announced, and it is with Pornhub. So there were a lot of jokes made about this because, number one, there was an expectation that the partnership was going to be much larger. Granted, there's a lot of eyeballs on Pornhub, but from the talk of the community and just the way that the general industry works, most porn is offered free. So again, you don't have to pay a membership for it. It's really just posted on the site. And the porn industry and the adult entertainment industry, they were one of the pioneers of this freemium service offering. They're also a pioneer in the internet. The internet was invented by the military, but again, it wasn't until there was an actual consumer base in the adult entertainment industry that it actually started to get some eyeballs. And again, video streaming and device tracking, porn has pioneered all this stuff and kind of made this more of a legitimate product. So the idea here is that the technology with private digital currencies is going to gain a little bit of prominence in the coming days. However, we just don't think that that's going to be with Verge necessarily, because they have kind of misled investors for so long. So again, there's a couple problems with this. There's a lack of support from the broader crypto community. If you look at other subreddits that aren't Verge, there's a lot of folks that really don't trust this technology. With Verge, they doubt the privacy potential of the technology. And again, there's also room for other privacy coins to kind of come in here and take away from this partnership, and also just have Pornhub or other adult entertainment websites just accept other cryptocurrencies like Monero or Zcash that have more legitimacy in the eyes of actual investors in the market. And on top of that, the price dropped about 42%, or around 42%, from the highest of highs to the lowest of lows after the announcement. So again, if that was good news, people would probably, or at least I would think that there would be more of incentive to actually sell, or to not sell and to see the price go up. But again, clearly it was pretty terrible news, and nobody really liked to see that. So again, that's really what's going on with Verge. And for education, we're looking at proof of activity. So again, you see proof of work. Miners have to show that their hardware worked for a mathematical puzzle. For proof of stake, network nodes have to show that they staked financial capital. So what's going on with proof of activity? You have to show that you were active in the mining process and the signing of the next block into the blockchain. So again, this is actually a hybrid of proof of work and proof of stake. And there are a couple things that are different. Number one, whereas with proof of work, the contents of the block contain a hash reference to the previous block, a hash reference to a block header, a Merkle tree root, and a digital signature. There's only a block header and a miner's reward address in this block. Once that block is quote unquote mined by the miner, it switches over to proof of stake, and a random group of validating nodes are required to sign a new block. And then from there, depending upon the amount of monetary capital that you have embedded in the network and in that specific block, you have a greater chance of signing for that block, and participating in the mining fees that are split among the miner who originally found the block and those that kind of took place after, once it did switch over to proof of stake. Now, an example of proof of activity is Decred. To our quick research, it looked like Decred was the only project that is working with proof of activity as an actual example of proof of concept, showing that it's actually out there. But again, I'm sure there's others. I'm sure that hybrid experimentations of POW and POS are definitely very interesting in the space. So again, just looking at ways we can kind of capture value in each of these platforms, or each of these consensus mechanisms. Proof of activity is another example of how to get that done. Alright, so that's it for today. Hopefully it was a little shorter today. We definitely think it was. And again, we're going to try to set this speed moving forward for you guys, so you can kind of listen to this as you go and not really get bogged down by extra fluff and extra conversation. So again, thanks so much for tuning in. Please like, please subscribe, please share this with your friends. We're going to be doing this every day. Again, if you want to subscribe to our newsletter, check out thedailybit.news, Twitter, The Daily Bit News, LinkedIn, The Daily Bit, Medium, Facebook. Again, just check out our social channels if you want to tag along for the ride. If not, appreciate you guys as always checking us out on our YouTube channel and Twitch. If you subscribe to Twitch, check us out there. This is where we're going to be doing our live streams. So again, that's it for now, and thanks so much. We'll see you guys tomorrow. All right, cheers.